everyone, and welcome to the last panel for day one. Thanks for sitting in. Today I'm joined by Peter Gianulis, CEO and President of Allegiant Gold, Zayn, Kalyan, Director and CEO of Scorpio Gold, and Michaud, President and CEO of Red Pine Exploration. So maybe we could start off with an introduction to each of you and your professional background.
Hi, my name's Zayn Kalyan. I'm CEO of Scorpio Gold. I actually started my career as a software engineer. I've been in the junior mining space since 2017. Financed a number of companies, worked very closely with CEOs and management teams. And as recently as at the beginning of 2023, I saw the opportunity to take on Scorpio Gold in terms of restructuring it and refinancing it. And in closing of that transaction, I joined the company as the CEO in February of this year.
Hi, my name is Peter Gianulis, CEO of Allegiant Gold. Prior to joining Allegiant, I did a bunch of things. I started in the biotech industry, which is, I think, the most similar to the natural resource industry in California. Then I moved to Salomon Brothers after graduating business school, where I worked in their hedge fund for 9 years. Then I started my own hedge fund called Carrollton from 2005 to 2016, invested in over 200 to 300 junior companies. Then one of my investors approached me to become an activist in the sector and started getting on boards of companies. And one of them led to the CEO role of Allegiant Gold at the end of 2019. So I've been doing it for 5 years. And although I've been in the sector for 25 years and I thought I knew pretty much everything about this sector, the last 5 years have really taught me that I knew absolutely nothing about running a mining company. So, Michael.
Thank you. My name is Mike Michaud. I'm the CEO of Red Pine Exploration. I joined Red Pine in April of this year. Previous to that, I was with Wesdome Gold Mines and St. Andrew Goldfields. Two companies that are sort of a junior producer stage, which is certainly why I joined Red Pine. So hoping we're going to get the Red Pine to a development stage in the near future. My background is a geologist, and I've worked for some smaller companies and some bigger companies. So sort of well-versed in the industry to take this project forward.
Okay, so I'm hearing that a big issue right now for explorers is the underlying commodity prices and the gap between how the companies are performing. So maybe we could talk a little about the drivers of that and how we can address those as well.
I mean, I'll go first because I've come from the investment management industry and the hedge fund industry. I can give a different perspective. I think the overriding theme for most investors is investors tend to chase performance. So although most people want to point to a certain element of management, project, VC risk, I tend to point to that performance has lagged, henceforth it has sucked money out of the sector. Now you can also argue the emergence of Bitcoin and other type of digital money and digital currencies and blockchain that have probably taken money away from the speculative side of the industry, which is the junior mining industry. I'll also add, and everyone that knows me knows I've always talked about this, that I do believe there's a structural issue primarily in TSX Venture that needs to be addressed. I've tried to take a lead role on that, but I think I need a few other people to help join me to help change part of the industry. But it would take me an entire day and a conference to go through some of the recommendations that I'm trying to propose to the TSX Venture.
Yeah, I would just add to that. I agree that I think there are some structural issues, but I think also over the past, call it 5-6 years, our sector's seen a lot of capital. It hasn't seen the capital inflow that maybe the ASX has seen. So I think junior mining companies in Australia have seen a lot more investment, and I think that's also, there's some structural reasons for that one. But I think also our markets, also the Canadian market, specifically the TSX Ventures, also had some trouble with a lot of capital outflow in the wake of kind of the collapse of the cannabis industry, and I think that caused a lot of cash not to be there, whereas in Australia, you kind of saw that build up in the market, and we didn't get the great benefit of that. But I do feel that things have kind of turned over, and as we see interest rates drop and kind of more risk on capital come into the space, we're going to be in a spot where I think things will start to kind of turn over a little bit. And I think the catalyst for that is going to be starting to see better fundamentals as the gold price appreciates, better fundamentals from the majors, and seeing more capital inflow kind of trickle down into the juniors.
I mean, I'll add one final thing if you don't mind. Like, when I got invested in this sector in the early 2000s and all the way up to 2007, which was the peak in this industry, the average junior that had a resource, an inferred resource, was trading between $50 and $60 a resource ounce. Now, that's significantly higher than today, but it pales in comparison if you look at it from a relative perspective. The gold price at that time was $600 an ounce. So the other way to look at it is that the average resource ounce was 8% of spot gold price at that time, 9%. That's the peak. Today, the average junior with a resource, an inferred resource, is trading at 0.5% of the spot price of gold. The mean over the last 25 or 30 years is actually 3% for an inferred. Henceforth, and I agree that there is going to be a large repricing in the juniors. It's coming. And just the reversion to mean will take it up, could conceivably go up 6 times with not counting dilution. There'll be dilution along the way. But there's a significant upside that potential in the juniors, just the average. The better companies with legitimate resources, in my opinion, will go up significantly more. And that will just be at the mean. And generally, in my experience, things tend to overshoot, and you could get back to those 5 or 6% of spot price type of valuations for inferred resources.
Yeah, well, I certainly agree with what they said. I mean, I'd like to think that gap will narrow with the commodity prices so high, and the junior shares are so low. Really, as we're starting to see, we just completed a financing recently, and some of the things we're starting to see is now the majors are making so much money, with the increased gold prices. They're starting to take more toeholds into some of the junior companies. One of them, was Alamos in Red Pine, that they've committed to funds into our recent financing, and I think with that, then you'll start to see more exploration, which we're planning to do, more results. And with those positive results, then we'll start to see an increase in the share price going forward. But whether that's a strong trend now, I don't know. But that's certainly, there's indications of that happening now.
Okay. Any questions before we move on to something else about the gold price? Yes.
I'm conscious of the fact that there's a lot of technical details on the sort of TSX versus ASX question, but rather than talking about the changes in TSX, are there any things that Australian authorities have done to sort of pull in capital or make it particularly attractive?
I think from a structural perspective, the Australian market is the way that their self-directed pension funds work. I think also provides a lot of incentive to invest in junior mining companies. I think the Canadian markets, actually, Canada has done a fairly decent job with the flow-through funding structure, which has worked, and obviously there's been some changes to that in the most recent budget. But yeah, I think following that lead of the self-directed pension funds probably could provide a lot more access to risk capital.
Any of the super funds for the exit dynamics, or I don't know, we can talk.
Yeah, we could talk. Yeah.
I agree partially. I think Australia's done a great job of getting their own investment community incentivized to invest in their companies that are listed. Where I kind of vie a little bit different, and no offense to Red Pine, but is the flow through has, and it's not Canada's issue, but the pricing of flow through, and everyone who follows me on Twitter knows that I'm a big critic of the flow-through financing. The primary criticism that I have of flow-through financing is the pricing of the flow-through financing, which creates a divergence between, and a discrepancy between American investors, or call it European investors, and American versus Canadian investors, towards favoring the Canadian investors. Unfortunately, 90% of all liquid capitals in the US and in Europe, not in Canada. And henceforth, as a junior company that doesn't have that project in Canada, which I don't have the advantage of going into the flow-through financing, but even if I did, it's the mispricing of flow-through financing which creates that discrepancy between an advantage for a Canadian investor versus an American investor. And until that is resolved, it's going to be very hard to pull back American investors. Like an American investor that goes into a company with a project in the Golden Triangle or Ontario or Quebec, like you don't get the advantage of these flow-through financing. And if a company's pricing them at a 10% premium, well, the break even is 30% below the market price, right? So if you're an investor and an existing investor in that company, you're down 30% pretty quickly. And I think that has to be resolved. I'm a non-Canadian, so and who invested quite a bit of money into the sector, I always wanted to invest in British Columbia or Yukon or Ontario and Quebec, but flow-through financing, the pricing of flow-through financing always created some apprehension from me.
Okay, so before we look at the challenges of exploration in North America, can we touch on what makes a region stand out and the opportunities in the region as well? What are you guys seeing from your side and your perspective? North America, yeah.
Yeah, I'd like to think I just left a production company, so we had lots of money in the bank to look for opportunities. And, one of the things I've noticed in the junior market was that because they've really been underfunded in the last number of years, they've really had to focus on creating value with a small amount of dollars. And, part of that is going back, looking at the geology, looking at some of the old data that exists already, and trying to better understand the model of why the gold is there. So when they have money, then they can concentrate the drilling in a better way to get results. So to me, the opportunity has really been a lot of these great projects that we see now that are really held by companies that are really undervalued. So from a sort of a company with money in the bank, that's a great opportunity. For a company now, like I'm in with Red Pine, you got to be careful that, all of a sudden your value on the market is low, but you have a great property and then maybe you don't survive much longer. So I think there's opportunities and challenges just from that one thing alone.
Yeah, I'd add to that, like the macroeconomic climate has obviously driven a lot of that too, with inflation and just the cost of drilling and everything has gone up. And then alongside that, there's obviously geopolitical risk and with reshoring and kind of this idea of kind of bringing production back to North America as well as friendly jurisdictions. It's kind of pushed the interest from the investor, I'd say, as well, to kind of look at tier one jurisdictions and having assets in both Canada and the US. And for that matter, I'd even argue Mexico at this point is definitely kind of on the top of the list for a lot of investors.
I mean, I think I would agree with him wholeheartedly. I think that what I've seen over the last 20 years, and particularly the last 5 years, is as the world moves from a unipolar to a multipolar world where you have Russia and China on one side, which basically dominate all of Africa, and then the US and their sphere of influence, which is North America and most of Latin America, and then China will dominate the Asia part. A lot of companies such as Kinross that had to get rid of their project in Russia, and other companies that are moving. So you see a lot of movement within majors and other companies, and they're repositioning their assets and their jurisdictions. Over the last 2 years, I've seen companies from Colombia, from Mexico, from other parts even that I never would have considered an unsafe jurisdiction, move into North America, looking at projects in Canada, looking at projects in the US. I see a lot of money starting to look at Nevada and Utah and Idaho.
From a political perspective, I'd also say that the politicians are definitely looking to kind of support that move as well, right? There's a lot of initiative to kind of bring production back to North America, and with that, there's more incentive in terms of permitting, et cetera. Like Nevada is a very easy place to work, and Canada's obviously seems to be getting a lot easier to permit, and there's a lot of initiatives to kind of fast track that development.
And just going back to what Mike said about the low valuation of companies, does that change the way that companies operate at all?
Yeah, certainly. It certainly does. I mean, financing's a big thing,
Yeah.
right? And I think we'd all like to go out and raise $20 million, but at a 5-cent share price for juniors, particularly, that's just not good business, right? So it all has to be a stepped approach or being creative, different financings, whether it's selling a royalty or other ways to try to reduce the amount of dilution. I think that's a challenge.
So we briefly touched on some challenges there previously. Are there any more that investors should be aware of? And what are the biggest hurdles that you're facing right now? In terms of
I think financing is always the number one. I think it's leveled off, but cost inflation was a big one. So I saw a major cost inflation from 2022 to the beginning of this year. I think it's leveled off. We're drilling, so I could tell you that our drilling on RC is down in terms of a per meter cost, about 5% over when we drilled in March. Our core drilling is up 10% from when we drilled in March. So diamond core drilling's up, and I'm talking about Nevada, right? And then RC drilling is down. I think that's the biggest challenge, is getting enough money, figuring out what's the best way. But Allegiant's a little different, that we're very sensitive to dilution. So we've tended to, and done well over the last 5 years based on that. Whether that's the right strategy in a bull market, I'm not sure it was definitely the right strategy in a bear market. Whether in a bull market, do you throw a little bit more caution to the wind, raise money, and do more work? Maybe that's the right solution. That's just me.
Yeah, I'd say it's you see at these conferences too that you see a lot of turnover in the companies that attend, and I'd say that the ones that have attended consistently are the ones that have been able to survive by continuing to have access to capital. And I'd say it's a small market for sure, and the companies that have been able to continually raise capital with great assets are the ones that are going to survive.
Maybe I could just add, I think a big challenge as well is just on the people side. Really finding technical people, especially for remote locations, has been a challenge, both in the exploration and on the mining side. So something we're going to have to invest in the future.
Well, I forgot about that, but that is a major challenge for most companies. I mean, we've been fortunate because our team has been together for a decade or more, but I know a lot of companies that are struggling to find just geologists to do logging, right? It's very difficult.
And what do you think could overcome that? Is it about the location? Is that the primary barrier to
I'd say more capital flowing into the space and more interest flowing into the space too, right? Like I think when we're in a bull market, everyone has a lot more interest in being a part of something exciting. I think you're starting to see that turnover, especially just in commodities in general. So.
And then maybe next we can touch on any recent regulation changes. Maybe not touching on the election that's coming up, but have you seen any recent changes that is advancing your companies or hindering them?
I mean, I think permitting across the world has become more difficult. Like I'm even Nevada, I don't think is as easy as it used to be. I have seen, and this is just from our perspective, because we have similar to Scorpio, I guess, and Red Pine, we have a portion of our project that could be put into production relatively quickly. I have seen a slight change in the attitude of the BLM and some of the other regulatory agencies that has been slightly more positive, but we've come off a period where it's become more difficult, at least for the last 5 to 10 years. And so it's a little bit mixed. I can only talk about Nevada, and the rest of the world, it really depends, each country.
I think that pressure is only going to change as the shortage of these metals and the prices start to appreciate. You'll start to see more and more pressure, but I don't think it's getting any easier immediately. There's a lot of lip service and people say a lot of the right things, but in terms of action, it's not quite there yet.
I think another challenge is also the communication, whether it be with the local community or First Nations. Certainly, you have to be engaged at a much earlier time. It has to be, more relevant. conversation than maybe we've done 20 years ago. So that's had a big change, and I think it's something that it's not a fatal flaw. It's something that you just have to work through, and I think then you're able to operate in these different areas.
Okay, so maybe we can now look to the future and look at what you each think that the financing environment is going to look like in the coming months or even years for exploration companies, junior exploration companies.
Well, I think we're all cautiously optimistic that maybe we're in the early stages of a bull market here, and I think with that, there's obviously hope that we continue to see the gold price appreciate. That's going to trickle down to other commodities. I'm pretty bullish on copper. That copper is going to definitely we're going to see much higher highs here in the immediate short term. But yeah, with gold, I think if we continue to see that price appreciation, that'll trickle down to more investment in exploration and ultimately see a better market for junior companies and more access to capital.
I mean, I've seen a recent changes the last 3 months more on something a little bit more easy and better in terms of financing environment. It's very, very early. The amount of capital that needs to be raised by juniors is in 5 billion or some type of number around there. That is really a small amount of capital in the context of the capital markets. I do think I made a statement earlier that capital will find performance, and as the junior market starts outperforming, more capital will come. It is a circle, a vicious circle that goes up on the upside as well, as opposed to the downside. And I think that you'll start seeing more capital coming into the sector. It'll chase performance, and one of the things that drives performance is there new funds being created that will invest in the sector. And I have started to see. I know I've been approached about new fund creation. And once that starts happening, inflows into the market, then all the paper that's being printed by the juniors that comes freely trading in 4 months, that gets absorbed by the new capital, and that capital then starts investing in new capital, and so on and so on. So I think that there will be new capital creation. I do believe that this feels to be real, and I think that would be a positive.
And I think I agree with Peter. I mean, it's going to be performance that's driving it. And, I think as an industry, we have to make sure that we have a lot of successes on the exploration side, and it's for good properties, and they're legitimate properties, and that when those people invest, they're successful in getting a return, and that we avoid sort of the projects that have, maybe been beaten around for a number of years, and they're just drilling holes with no end game, to have money flow into the company that's taking it away from more legitimate properties. So I think maybe if the investor knew the companies and the people and the projects a little bit better, and they chase those successes and be rewarded, I think that would be good for the industry, as opposed to more of a spread out financing into every project.
Thank you very much to our panelists. So thank you very much to our panelists.